Hey, I wanted to take a moment today to talk about assumable loans. And as you know, we are in a higher interest rate environment than we've been in the last few years. There are loans out there and sellers out there that are going to be marketing their properties as assumable mortgages. So typically, why don't you just give you a couple bullet points to be aware of as I'm not going to pretend I'm an expert in assumable mortgages because as a mortgage lender, something that gets assumed does not go through me. But I know enough to be dangerous and perhaps help out a little bit. So, assumable mortgages are when you can take over the current mortgage. So, if someone who has a great interest rate now on their loan that they got in the last couple of years could advertise their home for sale as an assumable mortgage. Typically, those are going to be VA loans, FHA loans, and some jumbo loans, typically adjustable mortgage jumbo loans. Those are going to be the assumable ones. So during that process, essentially, the buyer is going to apply with the current servicer of that loan to see about if they can qualify to assume the mortgage. If they can, then they essentially take over that loan. With VA loans, it's a little bit tricky because unless the um, borrower, the new buyer, is a veteran also, then the current veteran, the seller of the house, would not be able to receive a release of liability. And so they'd still be on the hook for the loan. So typically, VA loans are assumable by VA borrowers, and the seller needs to make sure they get a full release of liability from the lender so they get all their entitlement back and they can go out and use their VA benefits again. Um, I think probably the largest challenge that some buyers are going to run into with an assumable loan right now is that, let's say the house is selling for 400,000 and the mortgage that is being assumed is for 250,000, right? That's the balance. Well, there's a $150,000 spread there that either needs to be made up with some kind of a second mortgage or down payment. And so because VA buyers typically and FHA buyers don't have, a huge down payment, that can make it a little bit more tricky to assume, but certainly it's something that can be done. So when a buyer wants to do that, they would not work with a traditional lender. They would work with the lender, the bank who has the current mortgage on the property, and follow their assumable loan process. If you have any questions, let me know. Glad to help. And we'll talk.